Rystad Energy, and Michelle Bachmann, Principal Analyst at Lloyd's List Intelligence. Thanks so much, everyone, for joining us. Omar, I'd like to start with you, and we'll look at one of those questions that we had a week ago on Brent, whether it's going to touch 90 or 80 first. The majority of people said it would touch 90 first again. Would you agree? We're still kind of hovering in the mid-80s. What would be your opinion on where we're going in the third quarter?
My opinion hasn't changed. So we are extremely bullish. I think oil is going to set new all-time highs over time. The correction ended early June, and we've seen a meteoric rise. And I think people will have to start frantically searching for news stories and say, maybe it's the fact that the sun's shining, or maybe it's because I don't know. I'm sure they'll find something else. The S&P did this, or OPEC Plus. Now, obviously, they can't do anything anymore since that was like a couple of weeks ago, when everybody was bearish. But yes, I think basically inexorably higher. And it's not just a view that we hold about oil. It's a view that we hold about the S&P. It's a view that we hold about gold. It's a view that we hold about Bitcoin. It's a view that we hold about a lot of other things. So basically, we are also bearish the US dollar. And we think that the world is not deflationary, but is gigantically inflationary. We think that in a time where you have basically a US election, and you have wars all over the place, what that speaks to us is to printing money. Doesn't speak to us about prices coming off. But people still want to, and then again, we talk about the Fed. People will still say, yeah, but the Fed is not going to cut. The Fed is going to cut. The reason the Fed is going to cut has nothing to do with inflation, has nothing to do with anything except the Treasury needs to borrow a lot of money, and they need to pay interest rates. If they need to borrow a lot of money and they need to pay interest rates, they're going to move those interest rates down. Doesn't matter what inflation is. They can just make it up. And they've always made it up, and they'll continue to make it up. So higher across the board.
Higher across the board. Omar retains his view. We do have a couple of headlines today that say that because of the higher for longer mood on rates, yes, the dollar is remaining up, despite the sort of more longer term bearish outlook Omar is saying, but maybe that's going to impact oil demand. Mukesh, let's get your opinion on that, yes, we have seen a recovery in prices. Omar's right, in this month, relatively speaking, but we're still not sort of, is that just support from third quarter demand expectations that very much built in? What's your outlook for the third quarter? We have another headline about US jet fuel rising to pre-COVID levels, demand soars. I was in an airport last week and I couldn't move. It was so busy. So again, outlook for Q3 in the backdrop of the fact that, we've had the OPEC announcement for the few months ahead.
Now, good to be back here. And I kind of relate to Omar's, how can you be bearish at this point of time? We are entering the Q3. And if you look at the quarter over quarter sort of numbers, 23 over 2024, I know that OPEC stands out by putting a staggering number of 2.6 million barrels per day demand growth. Our number is about 1.4 million barrels per day demand growth, which is in line with, I would say, EIA and IEA, which are around 0.9 and 1.23. So, but Q4, I would still say that there is, over 23 in Q4 24, there is good demand growth. OPEC's number is about 2.3. We are probably also in the same range. Now, if you look at if I continue, the story beyond the demand side, which we always focus too much, right? And we also focus too much on the supply side. But to me, I think it's the refinery runs. We are going to see 1.3 million barrels per day of refinery runs growth. And in Q4 24 over Q3 sort of 2023, we will see more than 2 million barrels refinery runs numbers. So I guess my view is whatever the oil demand yo-yo, news cycle does, refineries probably will run harder. And that is the only answer is to be bullish about crude. More than the price, I would say the most important metrics in my eyes to watch is backwardation. in Brent structure, which is now come back to the 90, 70 cents. I think we had called when it touched almost near contango a while ago at somewhere in the early or end May. We had told it will come back, and now it's back. So I guess don't watch too much the oil price. Watch the backwardation, which the OPEC wants to control, because a very high oil price above 90s is also not interest of OPEC, because that will lead to non-compliance or production and somebody else getting excited, some other parts of the world to produce more. So 85, that's a good number. Backwardation, 90 cents, that's a good number. And as you rightly said, jam-packed airports and demand is going to come. So hard to think in any other way, as Umar was mentioning.
Yeah, I mean, hard to be bearish, maybe, and especially for the Q3 outlook. But, perhaps we need to be looking a little bit more longer term, which is certainly what OPEC's trying to do in terms of its revenue security. Michelle, good morning again. I mean, we've got another couple of headlines. We've had the regional story ratcheting up again a little bit from the geopolitical risk point of view in terms of shipping, in terms of disruptions. Houthis claiming 2 attacks. We haven't heard from them in a while, at least in public. We have the Israelis ramping up rhetoric about where they're moving on to next, Lebanon. From a shipping point of view, mood, sentiment, what are you seeing there on the water? Any change in pattern in the last couple of weeks, let's say?
Well, in terms of shipping fundamentals, the biggest threat to what's our most coming to be, one of our most profitable years ever is world peace. The problem in the Red Sea, the Houthi attacks on commercial shipping have definitely added extra demand because tankers are sailing around the Cape of Good Hope. What is happening now in the Red Sea? I saw those weekend reports. They come on top of like 2 attacks last week. 1 vessel was sunk. Really have been ramping up their attacks. We're seeing, though, unfazed changes in chartering patterns from those that still choose to go through the Red Sea. I think we're down, crude tanker transits are down year on year about 53% and about 48% for long range 2 or for product tankers. So that is relatively stable. But of course, the geopolitics is recalibrating oil flows for a second time. The first time, of course, was after sanctions were imposed on Russia's oil and shipping sector. So I'm very loath to make any forecasts because, especially in the tanker markets, geopolitics has completely undone the best of the carefulest of forecasts.
Okay, thanks, Michelle. Omar, I don't like to talk to you too much about geopolitics because we will never finish. But I want to get your opinion on that in terms of the risk premium and the price, because I know that you're saying inflation and the trend is up regardless. And in the last few weeks, we've had any geopolitical risk already built into the price. Does the market feel like things are heating up? I mean, you've always been of the opinion that we will see action in Lebanon from Israel, however much the regional powers don't want it, and the US is trying to stand in their way. Is there any talk in the oil markets about that? I mean, is that something that is of a factor that's factoring in?
No, this is basically all to do with, am I muted now? This is all to do again with the news. So we need to have something. When the oil price pops, they're going to have to say, it's to do with Lebanon. No. In like the last 50 years, nobody's scared about Lebanon. Nobody's cared about Gaza. Nobody's pretty much cared about Syria.
What about Iran, though?
Iran has deterrence with Israel. Right? They've shown that basically they can hit what they want to hit with Israel. So right now, I think people aren't thinking large enough in terms of geopolitical risk. It's got nothing to do with the region. It's got nothing to do. America and Israel need to have some kind of action with anybody to kind of divert attention to kind of, because if Israel stops now, it's going to be such a massive strategic defeat. And with Ukraine, next up, it's going to be absolutely terrible for the West and basically the US. It's going to be a complete disaster, the biggest disaster in history. So basically what they need is basically some kind of big conflagration, but unfortunately they will you know, they can, if they attack Hezbollah, if they attack Lebanon, they are going to be so badly beaten. I mean, people don't really not read, but understand. So Hezbollah has blinded Israel in the north of Israel completely. Radars, any kind of, you know, listening devices, anything at all. Hezbollah has flown drones from Lebanon, live stream,
we
which
saw
I've
those.
seen.
Yeah.
And basically pinpoint. So Israel is blind. If Israel attacks, I mean, even the Israeli army is saying like, no, we shouldn't do this, blah, blah, blah. But if Israel attacks, and I mean, it's horrible to say, but I mean, you know, it would be an absolute cataclysmic miscalculation, an absolute disaster. But unfortunately, they don't have any good options. So what I'm saying is you have to look at the bigger picture. The bigger picture is a massive geopolitical defeat for the powers that be. What does that mean for prices? So basically think about ancient Rome. If basically the Senate just went, you know, got absolutely decimated, do you think people will run around and say, no, you know what, the price of bread is coming down, come on, let's go to the Colosseum? No, they're going to be like, where's that guy? So this is what I think is going to happen.
Okay, well, let's hope that doesn't happen, but you know, in terms of the piece, Mukesh, back to you. You mentioned, you talk about refineries a bit. Let's talk about just in terms of China and Chinese products, if you like, and that export market. I mean, i.e. in terms of what it's importing in crude and its third quarter export of product plans, regional demand in Asia. Give us your take on that. I mean, it seems to be all quiet on the China front these days. The focus seems to be elsewhere. US economy, US interest rates, Europe in partial recovery. Has everyone accepted that China's stable for the rest of the year in terms of demand and even re-export of products?
I would say that if you look at the China clean product, exports for the week 25, they are much higher than 23 and last year, right? China believes that the downstream refining sector is one vehicle to stimulate growth, even if the demand side there might be concerns, but the downstream refining sector is a stimulus for growth, right? Because it helps other industries. So from that perspective, I believe that China refineries, some teapot refineries have some pressure, but otherwise China, a big plant, I think, is coming back from maintenance. So our view is that whatever happens, China's refinery runs by September, that peaks time, we are talking about 15.5, 15.7 million barrels per day runs numbers from the lower numbers, which were April and May, about 14.5s. So I see that China, irrespective what happens in China's domestic demand sector, and in the recent roundtable when we were there, last few weeks in Dubai, we talked of China 1 and China 2. China 1 is domestic driven, China 2 is international driven. Mm-hmm. China cannot grow unless the call on China from rest of the world increases, which is not increasing. You see there are a lot of tariffs and sanctions on EVs and many other things. But irrespective of that demand, refinery system probably is a vehicle for growth. And I believe that China will run harder refineries and probably they will capitalize on the product export quotas. And that is where I guess they will dump more product in the Asian market, leading to surplus, leading to bearishness. So if I have to worry, only one thing I worry about the crude market is that OPEC can control the crude market bullishness and supply cuts. Whether the product markets and refineries running hard and any misfire on demand happens and overproduction happens, then product side of the market by Q4 could prove and bring down the crude market. Crude market will be managed. So to me, China will probably will continue to spread.
Yeah, impact from products on crude. Thanks, Mukesh. Michelle, we have another headline today on our news bulletin about Gazprom boosting oil trade activity to counter its loss-making gas business. Just give us an update on Russian crude on the water. Any further impact in the last month of this sort of slightly stricter sanctions on Russian movements in terms of, how it's being paid for, movements into China, India, etc. Where do you see that going? Any change again?
Well, definitely, and watch this space. What we saw about 10 days earlier, the UK government imposed their first sanctions, direct sanctions on 4 vessels that were breaching the G7 price cap. And this is something that the UK government actually changed the laws just before Parliament shut down for the election on July 4. And as a result, it's having the same impact as the US sanctions on 18 tankers that were owned by Hennessy Trading or Hennessy Holdings. And that means those ships are completely taken out of the market. And that is a game changer for the enforcement and compliance on sanctions. And it signals that there's a greater coordination between Europe, the UK, and the US. And I think this is just the beginning of a pincer movement. We're having a look at the Scandinavian governments are looking at the vessels and tankers that sail through the Danish Straits daily, laden with Urals and Russian refined products. They're not happy with the blatant breach of environmental and technical conventions that are in place for international shipping. And I think that there's going to be more action, and that there's going to be extreme pressure on the bottom end of the market, what I call the dark fleet of tankers that are shipping this oil, which is currently, when I did my May figures, at about half of all Russian oil that is shipped from those ports is on tankers that are outside of Western jurisdiction. So I actually think that, in a couple of months' time, it will be a very different sanctions landscape.
Okay, thanks, Michelle. Omar, just back to you. I mean, again, it's not something that you track closely, but in terms of Iranian crude, for example, I mean, we saw, that's, again, I mean, does it make a difference? Are people looking at sanctioned oil? I mean, we've got the Russian sanctioned oil, that's moving. I mean, Iranian crude has been different.
Yeah, so basically the definition of insanity is basically doing the same thing over and over and over again, expecting a different outcome, right? So I've been hearing about Iranian sanctions and G7 sanctions and price caps and vessels. I mean, maybe I'm living in an alternative universe, but I mean, really, honestly, we're expecting basically now that the sanctions are going to have teeth and, it's going to cripple the Russian, I don't know what, blah, 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 just about as Ukraine is devastated and on its knees, and Sunak's out and Macron is, going to be, I don't know, lynched, and Olaf Scholz is like, has really now we're basically going to get like, sanctions, whatever. No. So no, I mean, I think sanctions and price cap and whatever, zero, absolutely zero. I mean, it's laughable. Even the Italians were talking last week that, look at the list of stuff that we were told compared to reality. I mean, it's time for Europe to kind of try and wake up just a little bit, because, it's a different world. It's an absolute different world. You can forget about anything to do with sanctions and G7 and all this kind of stuff. And
no impact anymore.
Okay.
Michelle, yeah, please do.
Yeah, I mean, I think it's right. I don't think sanctions are going to cripple, and their intention, especially with Russia, is not to cripple the economy. The intent is to keep oil flowing but reduce income to the Kremlin. So far, the G7 price cap has not really reached its goal, but I think there is increased coordination, and there have definitely been compliance measures that have been introduced in the last 6 months that have worked. Has that stopped the flow of oil? No, but I think it's a little bit more than rhetoric. And 17% of seaborne crude is now sanctioned oil flow. So that's quite a significant part of the oil market. And I think, yes, Europe, the UK, and the US regulators have a different views to elsewhere in the world. But I do think that because a lot of shipping and oil is done in US dollars, they can have an impact. And I see that they're going to have another go over the next 2 or 3 months in trying at least to make something happen with this price cap.
Okay, thanks, Michelle. There's the survey question for today. Oil prices in the third quarter, will they average 80 to 85, which I believe is what they averaged in Q2, or will we see the 85 to 90 band as an average in the next 3 months, or could we jump to 90 and go above that? So where do we think we're going to be as an average for the third quarter only? Mukesh, if you could tell us how you'd answer that. And also, I wanted to talk to you a bit about non-OPEC oil. We do have, another headline saying Brazil's rebound oil production to complicate OPEC plans. You were saying OPEC can control crude, but it can't control refined products. But we do have this non-OPEC story, don't we, which is just increasing all the time. So first of all, where do you think, if you had to guess, where would prices average in the third quarter? And secondly, any more dynamics from non-OPEC oil that are beyond what was expected as we go forward?
I will maintain my view that oil price to hang in the 80s, right? This is I've been saying for the last maybe almost a year, and my prime reason is that OPEC cuts and policies and reduction of supply to the market will probably cap the floor from $80 a barrel. The product exports, which the Middle East refining system is putting back into the world, which reduces the hunger for crude oil in indirect way. They are exporting crude when they export products. So that will cap the total upper side of the $90 a barrel. I think unless, as Omar was mentioning, we have a very significant outage from a weather-related event or a very strong geopolitical, I think 80s, between 80 to 90, our view was that the maximum probably we might touch 85 plus for some time, and then the prices might not go. So hang in the 80s. One more point I want to make about the sanctions was that sometimes we are applying sanctions on one country, but they are intended to hit another place. For example, the sanctions is not on Iran. The sanction is trying to put a check on China. Iran can probably sell crude somewhere else. US might be okay. Otherwise, if every sanction is applied in its right way, then we are talking of maybe $100 per market. So I think sanction in this era, I would say, is not an option where US can and the countries can say we apply sanctions and then execute it. I think with OPEC and Russia totally in control of the market, they don't have a choice to play a little bit of a blind eye to the sanctions. So if weather or geopolitics, then we will breach 90s. Otherwise, I will maintain hang in the 80s.
Okay, and what about just your view on non-OPEC production?
Okay,
is that something that is already built in? Do we expect any change in that dynamic in the third quarter?
I think US, we watch always in my 6 years I spent in Houston, Shell trade floor. US was always a surprise in the second half. I'm very waiting to see whether US will do some surprise this time around. Overall, our number
last year.
Yeah, last year it was 900, right? This year the number is around year on year about 400. But for multiple reasons, rig counts are down to the lowest 2021 levels. The inventory of the drilled and completed wells is low. So I don't see there is any surprise. And oil prices have been good. Shale could put a surprise when oil prices used to cross 60s and 70s. Now we have been living in oil prices, which are good prices for quite some time. So shale, probably no surprise there. Then it comes to Brazil. You're right that 3.7 was what Brazil. It went down to 25% probably in the April-May period, and it is rebounding. And I guess Brazil probably, I think Michelle can probably answer that. This is the best shipping profit from an year, right? And you need the very low sulfur fuel oil with longer routes. Brazil is crude oil from a quality angle is a very suitable oil to supply that kind of a demand. So I think Brazil would increase production in order to capitalize on this sort of opportunity. So yes, Brazil, US will not perform, and there are some other situations. So non-OPEC growth of about 800 KBD or so, which was there by extension of the cuts to Q3 and only tapered return in Q4, it is totally negated. So everything non-OPEC growth of 800 or 900 is now countered by the OPEC cuts. And for 2024, we are almost flat growth. So I think that's, again, a bit of a bullish sign.
Okay. All right. Thanks, Mukesh. Omar, just briefly, I mean, on that question of prices, I know you're saying it's the direction is up, but do you think we could hit 90 this year and hold there, or are we looking at an 80s range in your opinion?
No, no, we're looking over 100. What's this 80 and 90?
Before the end of this year.
This year, before the end of this year. I mean, I don't know. Honestly, it's like 3 weeks ago, whatever it was, people were telling me like, oh, it's so bearish, and I don't know what, and maybe whatever. We're printing 72. We come back and the market's printing like 80, right? And we set a low in this market on WTI. We set a low at 67.70 plus or minus. We rose from 67 up to about 87. We then dipped again from 87 to about 72. And this is basically a third wave to the upside. It's going to be extremely strong. It's going to be extremely long lasting. And what I'm trying to draw your attention to is political instability. The West is absolutely cratering, conservatives, Rishi Sunak, Macron, Olaf Scholz, Biden. I mean, look at the US. You've got a choice between somebody who doesn't know what day it is and a convicted felon, right? These are basically. These are basically. So you tell me. No, but look back at history, right? Look back at history. When did you ever see people like that? I mean, the saying is, people get the governments and the leaders they deserve, not the leaders that they want. Well, where did Hitler come from? He didn't come from
Omar,
like everything being joyous and stuff like that.
Mukesh,
No, I want to not challenge Omar, but I think his basic premise is a very geopolitical driven prices that I could agree. But if we look from a fundamental perspective, I think what market has missed for quite some time is the entire Middle Eastern refining system is exporting 2 million barrels, close to more products than they were doing in the past. And when you put products back into the market, rest of the world refining system needs crude to make products. If Middle East is also putting products back into the market, so the hunger for crude in rest of the world is less, and that's where I.
Mukesh, let me ask you a question, right?
Sure.
So, is the global economy growing or shrinking?
Is up. Yes. Yeah, it's growing, but of course it depends how much supply is being.
But again, this is the problem. The problem is that, as you all know, markets, especially the oil market, it has nothing to do, very little to do with fundamentals. It is sentiment driven. It is financial flows that drive oil. And the last time markets were basically, fundamental driven, where you say, supply is this much, demand is this much, 1 + 1 is 2, and it's minus 0.75 and all this kind of stuff. First of all, those numbers, you can maybe look at it over a year or over 6 months or over whatever period of time, but every day prices move, and prices do not move because of supply and demand, nor fundamentals.
On a short-term basis, day to day.
On a short-term basis, day to day. And basically what you have is, right now, I mean, this is what I was talking about, 2-3 weeks ago. The reason why we're having this move up, this initial move, is just short covering. It's nobody going long.
Yeah.
This entire move that we've seen so far is basically people covering shorts. Now they're hoping that we're going to see a dip right about now, and they're going to be able to cover more. But I think basically what you're going to see now is you're going to see longs coming into the market, and they're going to push it up so much that the people who still haven't covered are also going to come in and still cover shorts again. And that's going to lead to the market going up strongly. And again, I would point not only to oil, because you cannot look at oil just as like a market on its own, but look at all exogenous markets. They're all pointing in the same direction. There is an underlying current there. So if you believe that we're just going to go up a little bit and then we stay in that range and then we see what happens, that's not what's happening in the real world. In the real world, everything is going higher because inflation is going higher. Instability.
I just want to give Michelle a minute to wrap up. Sorry, Mukesh, but I'm glad to see you're disagreeing. And there's our survey result giving us the middle of the range, the 85 to 90, which is getting closer to what Omar was saying. We're certainly at the bottom of that right now. Michelle, I'll give you the last word. And just to get a bit of an economic perspective for you, you're based in the UK. Let's get your sentiment on the economy there, on Europe, because a lot is happening. We've had elections in the EU, UK, we've got elections coming up, people are predicting the results. But from an economic sentiment point of view, we see, Omar just said, are we getting economic growth? We are. In China, we still have it. In the US, Europe's had a hard time. But what is the sentiment going to the second half of the year, obviously with in mind on how that might impact things like demand for oil?
Well, here in the UK, we've just had our lowest inflation growth figures, I think last week. There is obviously going to be a change of government. And I think if it's all based on sentiment, then that can only be positive. I can't speak for France. I can just speak for the UK. So I think, from where I sit, obviously we have different perspectives, but there is a feeling that we are probably over the worst. That said, I can't speak for the US, where I think things are a little clearer from an economic perspective, but then they've got that political uncertainty going into November. I wish I had the positive sentiment about $100 a barrel oil of my fellow guests, but I certainly don't think that we're going to get anything sustainably beyond $85 a barrel by the end of the year. But we've all got different views.
Yeah, well, great. I'm glad to see that. We have a range of views this morning, which is great. And thank you, Michelle. Thank you, Omar. Thank you, Mukesh, for that. And we'll certainly see how that plays out over the next few weeks at least. Thanks so much, everyone, for joining us, and have a good week ahead.
Thank you.
Thank you, everyone.
Thank you.